pull it off Twitter. All right, I think we're live, guys. Welcome everyone who's tuning in. I'm just going to give it a few seconds to track down the tweet and get this thing promoted out there. Give me a sec. Here we go. All right. So, CLOBs on blobs. We have assembled quite the crew here. 2 CLOB founders, 1 high performance L2 founder, and 1 lowercase researcher, Monk from Masari, who's been, I think, the leading KOL on all this CLOB narrative that's been emerging over the past few weeks. He's definitely been ahead of the curve. And the theme of today is basically to unpack why is everyone all of a sudden talking about CLOBs? What do they achieve that what's novel about them and why are they so powerful? What's so exciting? Why are they the future of DeFi and decentralized exchanges? And then also to talk a little bit about specifically CLOBs on blobs, meaning what can you do in terms of building DEXs and CLOBs on rollups and data availability that you can't do on an L1 or a general purpose layer 1 chain. So why don't we start out? Well, just to make things a little bit more fun too, I brought a little beer, and every time someone says CLOBs on blobs, I will take a drink. So anyway, let's everyone's in different time zones. Let's go around and have everyone introduce themselves and just really quickly what they're building or what they're doing, and specifically interested in hearing if you have any hands-on background in trading and or using DeFi and sort of how that informs the work that you do and the thing that you're building. So let me start with Tristan and just go around.
Yeah, sounds good. Pleasure to meet everyone. I'm Tristan. We've been building Bullet XYZ. It's basically a ultra high performance rollup for Solana, specialized around perps trading essentially. We were previously building the Zeta Markets, which is one of the leading perps exchanges on Solana for the past 4 years. So we got a bunch of experience actually building exchanges. My background is more in technology, but I have a bunch of really smart co-founders who come from shops like Optiva and IMC. So we have like a good trading background, and we've been running exchange for so many years. Yeah, it's pretty much me.
Cool. So those are like HFT firms.
Yeah, that's right. More in traditional space, obviously.
Very cool.
Nice one. Thanks for having me on, Nick. So I'm Sam, co-founder of Rise. We've built the fastest EVM layer 2. It's still in testnet though. We've been able to deliver like 3 to 5 millisecond latency for transactions, and the reason we do that is for CLOBs. That's the use case. Market makers really benefit from that. My experience, I built up my own individual HFT shop. That's what I called it, but it was started out pretty backyard-esque, but has then eventually built it up to about 200 million a month. The time range is 2017 to late 2019, early 2020. And yeah, so I know what it's like as a user trying to build very high performant, low latency arbitrage and market making algorithms. What the use cases are there. And then on the DeFi front, I built a Vault protocol on Phantom and Avalanche I kind of got the DeFi bug, lost my interest in HFT. And I know what it's like trying to land transactions when there's congestion in the market. So I know it from the DeFi side as well, just the agony that engineers have been through trying to solve that problem.
So HFT guy turned DeFi builder turned like high performance L2 builder that is focused on like CLOBs as a use case.
Yeah, depending on.
Nice. All right, Varun, your turn.
All right. Hey guys, so Varun here. So my background is in aerospace and physics, so nothing to do with finance, but also founded Hashflow.
A lot of physics people do HFT, as I understand. So
yeah. So no, I think it's fun. So and then also founded Hashflow, which is a DeFi native RFQ trading platform. So that's been like actually live. It's done like nearly 25 billion in volume. Like we do like nearly 50 million a day currently. So that's been like going quite well. And then Hibachi is a next stage in evolution. It's privacy first, low latency perps exchange, right? So chain agnostic, mainly built with like Celestia as the private DA and using ZK approvers behind the scenes. So the idea is to build a high performance exchange that protects users' privacy, and that's that.
Cool. And Monk.
Sure thing. I'll keep this quick. Thanks for having me on, Nick. Hopefully you guys can hear me. My name is Sunny, otherwise known as Monk or DeFi Monk on Twitter, and I am a research analyst at Masari. No HFT background, no building background, some degen background, but that's about it. I basically have been at Masari for a while now, just covering DeFi. Really found like the first thing that I could really dive deep into was Hyperliquid early on. I was covering it about a year ago, and basically discovered the like beauty and efficiency of order books then, especially on-chain order books. And yeah, I'm gonna let these guys do most of the big brain talk. I'm here for the vibes, but my job here so far has been to just try to show love to all these protocols and highlight them the best way that I can. Through Masari's platform, through my platform on Twitter, because I do think this is one of the most important narratives that we've seen in DeFi and crypto overall. So yeah, happy to be here.
Yeah, I mean, I think you're being a little bit too humble. You've been ahead of the curve in a big way, covering Hyperliquid. I would say before it was really mainstream, and then obviously, I think writing the most comprehensive report on CLOBs as sort of like a new application vertical, and leading, I think, the discourse on Twitter in a lot of cases. We'll definitely be covering some of your recent tweets, which Tristan and everyone was kind of chiming into yesterday with Totally and a whole group of folks, because this is really, I think, kind of taken over the mind share of crypto Twitter lately. So, well, before we like dive into all of that, like more crypto specific stuff, let's like start with the high level things. So also no one said CLOBs on blobs. So my beer is feeling lonely here.
CLOBs on blobs.
All right. I got to do it. So let's start with the basics. What the fuck is a CLOB, and what advantages do they provide traders over other types of exchanges? Like, Sonny covered this a lot in his report of like all the different kinds of ways that people have tried to build dexes on chain, whether those are RFQ things, AMMs. There's a whole group of them. They all have different trade-offs. And now for the first time, we're seeing like the like performant CLOBs, like what makes them superior to these other approaches to building dexes. And I guess in exchanges more broadly, even in TradFi, because CLOBs do seem to dominate TradFi trading and price discovery. Anyone want to start?
I mean, I can kick off, I guess. Yeah. So,
don't be shy, guys.
all right, fine. I'll take it. So, I mean, it's interesting, right? Because CLOBs have been how trading began, right? So, if you go at the very beginning before the trading, you have like it's a bids and asks, and CLOB is basically central limit order book. So basically, everybody is posting the bids and asks, and then it's the most efficient way to match these trades and then execute the trades, right? So that's the most fundamental way to trade, right? So that's kind of how the trading in the digital age sort of began, right? So if you look at the history of trading, that's kind of how it emerged, right? So if anything, I would say like the whole DEX and AMM space that emerged in DeFi, that is a new primitive. And that's kind of interesting that we're kind of going back to the fundamentals. So it's like a circle of life, maybe like, wait a minute, maybe turns out CLOB was the right way to do it. It's just that there are some little things that we can tweak to basically achieve what we want to do. We don't need to reinvent the entire design from the scratch. Mm-hmm. So, because if you think of in the TradFi space, you already had like NASDAQ, New York Stock Exchange, which are basically central limit order books. Then you apply the same principle in Binance, Coinbase, etc. When crypto began a thing. And then you saw some issues with the centralization of exchanges, which led to the creation of DEXs, right? But then you realize the inefficiencies with just trading on chain. And then now we decided to build like clubs on chain. Then we realized they're not quite as efficient as a centralized exchange. So now the whole design space is what are the things we know how trading is efficient already. We need to figure out what are the things we can tweak to still maintain the ethos of crypto, but at the same time, not really losing out on how we already know is the best way to trade, right? So,
got it.
I'll probably just add some deep
go for it, Sam.
DeFi law context there. That the first exchanges on crypto were actually limit order books, but we quickly realized that it's just not feasible on chain. This is back in very early ETH days.
Like Ether Delta or
Ether Delta, was it?
I can't. I don't even know, but that's.
I remember Serum on Solana. That was
that's right. That's how we got started. So
anyway, sorry, Sam. Keep going.
And we essentially wasn't working, and the real innovation was the XY equals K AMM style pooled based books, and pooled based exchanges. And they were an awesome innovation, but I think the theory that I think a few people on this panel would agree with, that was a stopgap while technology essentially got to the state where we can have books fully on chain. I think one take there is that if AMMs are so powerful, why don't we see them in TradFi?
Yeah, exactly.
I think ultimately where we're going with crypto is that with DeFi specifically is a majority of the volume will happen on CLOBs. You'll likely still have some volume on AMMs for the more expensive chains. But yeah, that's where we're going.
I can chip in as well. So it's like I got into crypto around 27, like right before DeFi summer. I kind of missed out on that. And actually my co-founder was one of the early kind of market makers on Kyber back in the day. I think Kyber was order book based. I might be wrong on that, but I think it was all on chain. It was pretty inefficient, high gas fees, really wide spreads essentially. And there was just a very, now looking back on it, there's a very weird incentive setup where to be a market maker on the exchange, you actually had to pay the exchange for the right to do that. Whereas it's completely flipped in how it is these days. But then things very much moved to the Uniswap model, basically using AMMs. It was just very simple to bootstrap pools. You essentially have these two-sided pools. You'll put whatever your altcoin is and your kind of coin asset, whether that's ETH or USDC. Made it very simple to provide liquidity on this essentially theoretical curve. But it had a lot of downsides as well. Even though it was easy and you could spin up these permissionless markets and you didn't need sophisticated market makers, I think it's been proven time and time again, LPs just bleed money on these AMMs. They're basically getting arbitraged all the time. They update really slowly. The way that they requote is essentially really naive, and you have big problems of sandwich attacks essentially on Ethereum. What people will do is they say the price is here. They see an incoming order coming to the mempool. They will basically jack the price up, so front run them, execute the trade, back run them essentially back. And so you're just basically bleeding people who are kind of in that LP pool. And I remember the Ellipsis guys had this really good Dune dashboard. They did what's called markouts, essentially looking at adverse selection or looking at the price a few minutes after trade was executed, whether it moved in the same direction or opposite direction. And LPs were just consistently just getting hammered and losing a bunch of money. So Uniswap LPs probably subsidizing stuff to the tune of tens or hundreds of millions of dollars, which is the marketing term permanent loss. And then, those fees never really, I think, subsidize the losses for LPs. So it was kind of a losing game. CLOBs, on the other hand, you don't get forced into this model. It's very expressive. You can basically express arbitrarily complex liquidity on the order book. The problem is it's not very gas efficient. That's why it didn't work on Ethereum. You have to send literally thousands of messages to update. It's all kind of based on time and requoting. Every single time you want to adjust, it costs some transaction fees essentially to do it. So I think the kind of design space is more moved to off-chain or hybrid models, or even a lot of these high-performance networks, high-performance roll-ups have just made it much more feasible to do CLOBs these days.
Yeah.
I guess I could just quickly add. I've seen a lot of confusion on the timeline about what a CLOB is, why do we care, and also why are we bringing this up again? Because CLOBs have just kind of been an undercurrent of DeFi and crypto exchanges and building them in general. But the way I basically tell people is this is how every single large TradFi exchange is run. This is how Binance is run. This is how all the centralized exchanges that lead crypto asset trading volumes around the world. This is how they're run. And in the simplest form, it's just the most pure and simple way for both a taker and a maker to express their view on pricing and directly control exactly, how they want to transact based off of their view on pricing. And so this means it's very capital efficient. Makers can basically cancel orders and place new orders based off of what they view true price is. And takers can directly just interact with the order book to either place a market order or place a limit order based off of what price they want to transact at. And so it's really not that complicated from a use case perspective. It's how everything else is run. Tristan brought this up. The only bottleneck really has been that it's been too difficult to build on chain thus far. Until there have been prior implementations, but I think Hyperliquid really broke the sound barrier in terms of allowing this to be built on chain. And in terms of why we care about it right now, like that's kind of exactly why. Like Hyperliquid is showing that this is a type of application that has insane PMF, and that it can be built with some work. And so for me, that's kind of why I started covering it more, and that's why I think people might be more interested in looking at how CLOB design trade, like the nuances behind CLOB designs now, because it's become such a prevalent business for Hyperliquid.
Yeah. Sorry, I also just pulled up your chart from the report that you wrote, which I thought was excellent, kind of covering the different DEX designs and their different trade-offs. Go ahead, Varun. Sorry.
I was just going to say, basically, the reason it became interesting again is because I think for the long, early days, we thought clubs on chain, bad idea, right? So, and then all of a sudden, now we're like, wait a minute, clubs on chain could work. So maybe the technology is there to build something that we previously discarded like 5 years ago.
Mm-hmm.
Like this is not going to work. And now I think the whole primitive is how can we make this work in a more efficient way, right? So Hyperliquid with 200 millisecond block time is pretty fast, right? So obviously, maybe not as fast as Binance in terms of order placement and so on, but still orders of magnitude better than what you had like in 2017, where you had like Ether Delta with every transaction going through ETH mainnet, right? That was like not good. So yeah, I think it's not necessarily like people in crypto are discovering clubs all of a sudden. It's more like they're discovering that, well, they finally realize, we're seeing that clubs on chain can actually compete, at least they are in a much more sophisticated level than they used to be, right? Which is kind of interesting. So
I actually had a very curious question, because Varun, you used to run Hashflow, which was like a pretty prevalent RFQ platform. I was wondering what your thoughts are on that model. What were some of the pros and cons that you ran into there?
Yeah, no, I think RFQ, I think it's the way we like to say it is it's probably the best way to price assets on chain, right? So because AMMs are really good to launch an asset and launch a new coin at pump.fun as an example. Like if you want to just launch a coin, you just go create a pool and you have a market, right? But once there's some form of price discovery, and you don't want to have tons of capital logged into a single pool and wait for some people to trade against it, like RFQ just allows you to dynamically adjust your liquidity at any given time, and then basically price multiple assets effectively, right? So because we can literally sit on a $50,000 capital and do millions in volume across most long tail assets on Solana without having to deploy that much capital per pool, right? So, which is actually pretty cool, right, in that sense. And given that, in DeFi and everything is mostly quote based, requesting something and then receiving a quote, which is kind of how AMMs create the UX anyway. RFQs is basically preserving that UX, but then back end behind the scenes, you're doing a much better job optimizing the liquidity, right? So I would say AMMs are really great for launching or bootstrapping a coin, and then RFQs are a great way to price them while managing the inventory effectively, right? So,
So why CLOBs over RFQs then?
If you want to be a serious trader who wants single millisecond latency and have fast order matching, do more advanced order types, so then you can't really do them on RFQ, right? It's at that point you need more robust infrastructure to support something like that. So they pretty much offer very, very different use cases, where one is designed for even like high frequency trading, or even if it's not an HFT trading, just doing like even price discovery. Like you can't really do price discovery on an RFQ engine. You need like a CLOB to arrive at price discovery. And once that happens, then you can use that price as a reference point to offer RFQ to people to trade on, right? So, for example, most of our market makers who quote on Hashflow, they get their price reference from Binance, OKX, other oracles. And those are the ones where price discovery happens, and then they use that mid-market price to tell you. In fact, Uniswap gets its price from Binance, OKX, etc. as well, right? Because price discovery happens on your CLOB or CLOBs, and then they use that to basically create a bonding curve that sort of references the price. And anytime there's an arbitrage, you trade to make sure you trail that price that you see on Sexes, right? So really, your CLOB becomes the centerpiece of anything that happens anywhere.
But I guess the distinction there on the arbitrage is like with an AMM, essentially the only way it gets rebalanced or the price gets updated to reflect the fair is like people trade into it and arbitrage it, which means that the LPs kind of have to eat the losses there. RFQs, I guess they can just re-quote or not kind of trade into those like toxic trades. And then CLOBs, I think it's a similar deal. People can yank quotes and readjust them, or if they're too slow, they get picked off.
Yeah, so at this point, it's not necessarily we need to build a new CLOB. It's like we already have a CLOB. How do we... the reason we want to have DEXs is to avoid the centralization issues that came from using centralized exchanges like FTX fiasco, or Coinbase leaking user KYC, not on purpose but happened, right? So things like that you can circumvent by using DEXs, but then you have issues like privacy. You've got things being slow and so on. So now how can we address those things while preserving the efficiency of CLOB is what we're really looking at, as opposed to inventing or discovering CLOB, right? So
makes sense. So the interesting way to open everything up, I kind of want to move on to sort of the next question, which is, I mean, it sounds like we're all very bullish on CLOBs. We all see the reason why this is the next evolution of building DEXs, especially for like price discovery. So I don't know who coined this first, maybe Tristan did, but with the people are sort of talking about this new phrase like the CLOB wars, right? Where I think Hyperliquid has sort of made the first shot in this war and very much has the lead. But to me, it still seems very early in terms of like, first of all, the overall CLOB market share of crypto trading generally on chain, and also the market share of like on-chain trading versus like global trading and even TradFi. So, and oftentimes in crypto and in any technology, the first mover does have an advantage, but is not guaranteed to win because there's usually ways that you can improve upon the model once it's been demonstrated. So I kind of want to get all your guys' takes on these CLOB wars, and specifically how this relates to CLOBs on blobs. Like the theme of this stream is, to me, I think there are advantages that you can get, new features that you can unlock that are important for traders and market makers on CLOBs by making the trade-offs of building on a roll-up versus building on a general purpose L1, or even building onto your own application-specific L1. All the three of the builders here are building rollups, and so I kind of want to get your guys' take on that. Maybe first let's hear from Sam, sort of the way that you're thinking about it. I mean, both Sam and Tristan have already achieved kind of like mind-boggling levels of latency, but I'm sure that's like definitely a massive edge. I hear people talking about trying to achieve Binance level latency, which I think is on the order of like 5 milliseconds or something like that. But I think there's a lot of other dimensions of this competition, and I want to talk about like roll-up specifically. So Sam, take it away.
Yeah, so where we started out was looking at Binance's performance, what it delivers and offers users. And so if you look at a typical, not typical, but one of the bigger market makers on Binance, you're like one of the top VIP tiers, you're doing about 100 million orders per day. I think that I've heard from someone that used to work at Binance, that's the API limit. I don't know if it's not publicly released what the API limits are for some of those VIPs, but let's say it's ballpark about 100 million orders per day. That sits at about 1.1 KTPS. So we're a long way from that. But if
per person, per trader,
per trader.
Wow.
So if you want to support the biggest traders on the space on Binance, you're going to need to have 10 to 100 KTPS. And we've seen that on Hyperliquid. They're pretty steady state at about 5 KTPS. They've recently pumped up over 10K. And so that was a goal. We had to hit throughput. But then on the latency front, Binance sits at about 5 milliseconds. I'm fairly confident I can get a bit lower to about 1 millisecond. And that's
you think you can do that on Rise?
We can, yeah. We can
1 millisecond.
Yeah, you could. It's possible. Tristan's done even faster with particular order types. It's doable. It's just blockchains weren't built for low latency environments. They were built in a manner where blocks are built as these discrete objects that have a lot of overhead. But if you scrap the blocks and make it essentially continuous, and then delay the block construction, you can provide a Web 2-like experience, and that's exactly what we've done. And,
is that what people like kind of reference as shreds? Is that sort of the same idea?
Yeah. So our shreds are those shreds. We leverage that term from Solana as a bit of a hat tip because that's what they do. They do 20 millisecond shreds or something around that size. We do much smaller shreds. Our shreds are between lower than 1 millisecond in some scenarios, but as the throughput goes up demand goes up, it can increase a bit. But yeah, so let's just talk. I just want to talk about those numbers because how we look at it is purely like starting at the product. If we can deliver 1 millisecond latency execution as well as say 100 KTPS as the ballpark, that'll support enough big traders. Is the cost going to be viable? And so the cost of a transaction with an L2 using Celestia, if it's just the baseline cost, is about 1/100th of a cent. So for each of these users, you're spending about $1,000 a day on DA just for that user. But what's that user bringing back in revenue? So VIP fee schedule, you have to hit 25 billion transactions per month in perps and 4 billion transactions per month in spot. What that converts to is $56,000 of revenue per day on spot and about 17K revenue on perps. So the margins are there to do this. We're not trying to climb uphill here. It's very possible at scale to do this, and that's really we saw these numbers, and that's what gave us the confidence to really pursue CLOBs as the key use case for a generic chain. But bringing the question back to why we've done it the way we've done it, we think that composability is a real opportunity for CLOBs. The fact that you can build primitive, the CLOB is a primitive, so you can build money Legos on top of it, like a fully on-chain thing, for instance. I kind of see that the DeFi 3.0 will be money Legos on CLOBs, and that's how we've ended up where we are.
Yeah, interesting. I mean, first off, making the business case of like CLOBs on chain and how it can all the numbers can add up and it can make sense. I also had no idea about the VIP power users and just how many trades that they're sending. So it just shows you like the kind of scale that we have to reach for. And then you kind of like front ran one of my questions, which was going to be about like, you see Hyperliquid starting out as a CLOB and then adding this general purpose execution on the side for people to build apps on top of. And so I was wondering if like, is that a trend that you guys see going forward or not? But before we go like deep into that, I still want to keep like unpacking all those like trade-offs and new features that you can unlock by building, or, even just improving on the Hyperliquid model as it is. And especially like as a roll-up. I don't know, Sunny, you said you were writing a report on this, so maybe you have some high-level thoughts.
Yeah. I didn't want to title it CLOB Wars. I thought that was a little too contentious, but if that's a term we're going with, that would be a great title for part two. But basically, yeah.
You got to brand it like Star Wars, You
have a scroll.
Yeah.
Let's go through.
I'll separate the teams. But like, the way that I view it is like, you can optimize for the taker and you can optimize for the maker, and you have basically what you want to do is you want to get both for an efficient CLOB. And I would argue that crypto has plenty of takers. Like there are a lot of degenerate retail takers There's good flow on crypto. You're seeing it now on Hyperliquid, where all of this latent demand has just been sitting here on chain, trying just dying to try perps and get some leverage in an easy format. And I think even what you're seeing with the Solana trenches, like in some way, like those people are almost ideal candidates to introduce to like a CLOB-based perp protocol. So I think on the taker side, like there's plenty of demand here on chain to satisfy like a whole number of winners. I think like where we're getting at now with talking about these design choices is really how do we bring makers on chain? Because historically we just haven't had a solid presence of institutional market makers, large market makers on chain making CLOBs, partially because of the inherent limitations of the blockchains we've had to deal with in the past and even to this day. And so all of these things that we're talking about, like end-to-end latency down in the millisecond range, the single-digit millisecond range, whether or not we can allow for co-location for market makers, whether or not we create speed bumps to protect market makers. Like, I think these are all things now where, okay, we've identified that there is a path to bring them on chain. There is a path to give them a performant enough environment for them to flourish. How do we connect them to the takers that we have here ready to go? And how do we build a platform that appeals to them as well? And so in my opinion, like I think Hyperliquid winning is good for everyone. Like I think it expands the pie because, you know, we've had order books in the past. We've had things like DYDX. We never had anything take 20% of Binance's volume share on perps. Like that's something that we haven't seen before. And so not only 20% volume share, but highly profitable taker flow. James Wynn, $1 billion notional position type flow with no edge. Like this is profitable stuff. Like makers want in on this action. But whether it's because of compliance, whether it's because they've just never gone on chain, like they don't know how to deal with the intricacies of market making on chain, it just hasn't happened. Like now there's a way for them to look at Hyperliquid and go, okay, like maybe we should venture on chain and think about how to like profit off of the inherent demand here. And so I think Hyperliquid expanding the pie is good for everyone and that there is space for multiple winners. And so I actually view it as a huge unlock on the market maker side. Like how do we bring all these people from Binance, from Bybit, from OKX? How do we get them here?
Absolutely. Yeah, I think you know, it's not like a zero-sum game within DeFi. It's more like how can DeFi take more of a share of CeFi? I think Hyperliquid's been the most successful so far. Tristan, I don't know, do you have any thoughts on the roll-up architecture specifically and what it unlocks and why it's the future of the CLOB wars?
Yeah, for sure. And yeah, I don't think I can take credit for coining the CLOB wars term. I thought that was Monk or someone else, but I'll have to find out where that originated from.
Actually, you know, I'm gonna pull your tweet because I thought it was really good. Mm-hmm. I don't actually know how to do this on StreamYard. Let's see. Just share my screen.
Yeah, in the meantime, I like totally agree with what Sunny said, essentially. Like having these conversations maybe 2 or 3 years ago with market makers, they were just kind of not treating DeFi like a serious thing. It was like they didn't want to get into it. And now I think they've seen that everyone's come on chain. This is where the opportunity is. DeFi is catching up to CeFi. You know, suddenly like it's kind of switched this thing in people's mind to jump and get all on board on DeFi. In terms of
well, I'm just sharing your tweet, so I'm going to give people a little bit of background here because I think this is probably relevant to what you're going to say. It all started with, I guess, Sunny here tweeting about Solana. You know, they should approach this and support more like roll-up type CLOBs on Solana. You're like the foremost sort of founder, builder of a roll-up CLOB on top of Solana, and you were kind of responding to Totally saying, "Oh well, you know, a CLOB that's off-chain is not driving REV to the validators is like kind of a competitor." And then he was explaining how why this you know, you're kind of explaining why you don't see this as an issue, like it's kind of inevitable because of the design benefits of a roll-up. I don't know if you want to kind of unpack this.
Yeah, sounds good. So the history is we wrote an exchange fully on Solana, like literally the order book matching engine was written in smart contracts. So it was like a fully decentralized, fully on-chain central limit order book. We basically built off the back of some of the Serum work that was done 4 years ago, essentially. Rest in peace. Mm-hmm. But it definitely had its limitations. Some of the biggest problems for us were like congestion essentially kind of affected us on chain. The finite block times of 400 milliseconds, which were way better than ETH, like back in the day when we were building. still kind of not fast enough, and there's still a bunch of latency arb. If you think we talked about Binance being 5 to 10 milliseconds, Solana 400 milliseconds is great, but it's still, you know, like 1 to 2 orders of magnitude too slow comparative to centralized exchanges. So there's like a lot of arbitrage. And this is something I experienced as a practitioner. Running this exchange, there was a lot of arb flow. Market makers fundamentally couldn't stay profitable without incentives. And that's like a really big problem to like keeping them on long term, essentially. If you always have to incentivize, if they're always just burning money, it's a big problem. And like the main thing that was like a really contentious topic, I guess, is around congestion and the priority fee markets on Solana. So basically what happens is you have this latency race. I come in there, or market maker A comes in there, he posts, you know, his prices essentially saying, I wish to quote Solana at like 99 at 101 or something or other. The price moves essentially from the fair price of 100 to maybe like 110. This guy is now saying, yeah, exactly. Like, you know, it could happen in literally a couple of 100 milliseconds. I'm exaggerating in terms of the numbers, but, you know, it will move out of that band essentially. Binance is typically the price leader there. People will look at that. They'll reference the Binance price and they'll say, man, this guy has stale quotes now in the order book. I'm willing to lift him on the ask, essentially buy up basically all he has there in terms of the resting liquidity at 101. And I'm going to go sell that off at like 110 on Binance, essentially. And you just basically profit the $9. And so people are just running these ARB bots essentially and just like, you know, basically draining or kind of like eating into the profitability of these market makers.
Why can't the like impermanent loss, but in a different, but in CLOBs?
Yeah. There's definitely some similarity. And so the problem is, at least on a discrete kind of blockchain rollup, people are racing essentially. So the two people that are racing is you have the limit order there at 101. The market wants to cancel it, but the taker essentially wants to basically trade into it and make a bunch of money. And so these guys are both vying for the same order, you know, to try and get there faster. And in like a Binance type setup, it's FIFO. These guys, just whoever has the best execution latency will go in there and they'll get in first. In Solana space, essentially, it all goes down to JITO auctions or some kind of priority fee auctions. These guys will both be there. And it's just negative EV for the market maker in that either you don't pay the prior fees and the guy takes your order and you lose a bunch of money, or you pay up a ton of prior fees to outbid this guy and you take your order off. But in either case, just to cancel your order, you're always paying a bunch of money for it. So you're always just kind of like losing in terms of profitability.
Is the game theory that like you should bid as much for a priority fee as like that person will make off the ARB?
Pretty much.
Yeah.
Tristan.
It's good for the protocol though. It's good for Solana. You know, people pay a lot for priority fees. Yeah.
Quick question, Tristan. Do you actually know, or anybody who knows, like how much that could cost if you are a market maker raising the cancel today? Like obviously it's going to vary on what congestion is looking like at any given point in time. But can't it go into like the dollar range?
Yeah, for sure. I don't know the exact numbers, but I remember talking to some of our market makers at least last year when congestion was really bad, and they could pay up to thousands of dollars a day just in kind of priority fees to cancel stuff, if not more than that. I'm sure during like Trump launch and stuff like that, people were paying tens of thousands of dollars. Yeah, that's fundamentally the problem. You got to pay prior fees and you also got to pay base fees. I don't think this is like a thing on Hyperliquid, or even if it is, it's extremely low. But every time, like Sam said, you know, if you want to, you know, cancel and replace 10 or 100 million orders a day, each one costs like, you know, whatever, couple of thousand micro lamports on Solana. Like this actually adds up to a lot of money and also eats into your P&L. So that was kind of the discussion I was having with Tolly here, was like the fee markets are kind of a bug for like on-chain price discovery and like real-time trading. And the current priority fee mechanics kind of don't work super well for it and kind of annoying. And then the second point I was making, he was basically arguing rollups can be parasitic to the L1 or there's some kind of like cannibalistic effect. But yeah, we chose doing this rollup because we can make all the opinionated choices. We have single sequences, so we can get extremely fast execution, like Sam said. We get congestion resistance. We get a bunch of other benefits. We can kind of tweak things as we want, you know, which we couldn't do fundamentally on a general purpose L1. It's good that Anatoly is taking all this feedback on. They're trying to build it into the L1. He did say the timeline is like a year or something or other. So we'll see how that materializes. But yeah, I fundamentally, I think, disagree with him that like L1 block space should not be compared with L2 block space. Like we are bringing so many more transactions to Solana. Like if we were live today and we were doing $1 billion of volume, I think that is like net good for Solana. We're bringing a ton of perps volume to the platform. All those roll-up transactions are getting batched up and posted on chain as DA essentially. But that is like net new, I guess, like transactions, gas paid to the L1, which is like the REV that they talk about, and just general like mindshare, users coming to the chain, stuff like that. So yeah, I just think that use case doesn't exist in its current form. Like current Solana perp dexes are not doing super well or struggling, or they're not competitive. If we were able to have that solution, I think that would drive net new demand for Solana.
Makes a ton of sense to me, especially when the alternative is just losing that to Hyperliquid altogether versus a project that's built and part of the Solana ecosystem. I found this tweet super. I mean, in general, I feel like you have some of the most insightful tweets on this stuff. So like I always, I'm going to turn on notifications for you. I don't know if Sunny or Varun have anything to add or comment on, or Sam as well, on that whole theme before we kind of move on.
I think Tristan, you did a good job.
Yeah, I think one thing I'll add is the whole point of all of this is to just get spreads as tight as possible for users on chain. And with prio fees, with base fees, with congestion, I mean, these are all variables that market makers have to factor in when they're trying to figure out what spreads they want to quote. And so again, the whole point is to get these spreads as tight as possible. And it's just not like, I think we can argue on the timeline and how things can be done, but the truth of the matter is like it's just not possible today on most general purpose L1s. I would venture to say like all general purpose L1s to recreate what Hyperliquid has been able to do.
But even like, let's say that they do ship all these improvements, theoretically, aren't there still issues or not? I don't know, Sam, I saw you unmuting. Maybe you like, I would think that there are just fundamental limitations on how fast you can confirm shreds on an L1 versus like a rollup where you can have a centralized sequencer, right?
Yeah,
or just a smaller sequencer set. Go ahead.
Yeah, this discussion came up with the Chain Derby. We released a fun vibe coded app where you like test the latency of different chains from your browser. And
right, yeah, that was a great demo. I'll pull that up actually. We keep talking.
Yeah, so the high level there was it demonstrated your like return trip latency from your browser. And it sparked a discussion about L1s versus L2s, and L1s essentially saying that we can do this with pre-confirmations if we wanted to, like shreds are available in Solana, which is true. It's very hard to access those shreds if you're a user. Like there's not a clean API where you can just get a confirmation using Solana shreds. It's always going to revert back to the block. But even if you were getting Solana shreds as pre-confirmations, it'd still be in that block time range. And the shred time, which is like 20 milliseconds, you can reduce that a bit. I had a bit of fun with the audio on this as well. But yeah, the overall challenge is that it's really this trade-off between how decentralized you want your validator set. If you're willing to accept to have a small select number of builders in a particular region, or if you're happy with a single sequencer, or if you do want distributed. And that's where Monad landed. They essentially said we don't intend to build the fastest chain. We're finding a trade-off that leans more towards decentralization. I think everyone in the room is very much on the hard, as performant as possible. I probably differ slightly with Rise. We are trying to find a delicate balance, and that will likely be like a regional based distribution, similar to Hyperliquid. But yeah, if you want a broad distribution, if you want validators over the world, you just simply can't offer latency anything consistently below 100 milliseconds, because that's just how long it takes to get around the world, unless you're a majority of your validators are clustered within one particular region.
Yeah, I would imagine. I mean, if you have a rotating, I guess there's multiple current proposers at the same time, but like, yeah, if you can actually physically co-locate because you know where they are, you probably can't get that with a distributed validator set. Like, it's kind of funny because that has always been like the thing that people aspire to, but then it actually counterintuitively seems like a flaw when you're trying to build CLOBs. So, and
how we look at that is that we're trying to keep the best things of crypto permissionless openness. And I think you can do that and have censorship resistance with a deployment in a region that has a high density of countries. So say like particular areas in Asia or in Europe, you can distribute your validators in a small cluster, but with lots of essentially like regulatory security there.
Got it. Yeah. Varun, I want to kick it over to you because I also know that a big part of what Hibachi is about is privacy. And there was a tweet a couple of weeks ago, I guess, from Jeff at Hyperliquid about how transparency of orders essentially is like actually better for like trade execution or something like that. I think the sort of like people's reactions were a little bit mixed on whether like how true that was. But I know that you guys very much take the stance that privacy is really important, and that's obviously something that Hyperliquid does not offer. So I'm curious to hear, like, how does your design of a CLOB, and specifically like as a rollup, enable you to do privacy for the trading experience?
Yeah, well, I guess it's a pre-announcement on this channel of the major announcement next week.
Well, you don't have to leak anything.
No, it doesn't matter. Right? It's happening anyway. So no, but I think general, right? So if you're gonna build something fully on chain, unless your chain is like built with privacy in mind, where you can't really disclose transactions, you have some kind of encryption, not sure. So it's you will always see all transactions that anybody can look up on the Explorer, right? That's, I think, part of the reason why people want blockchain, because of the ability to audit anything, I bet. So as a result, Hyperliquid being an L1, like you pretty much can't see any of its positions and anything that is going through on it, right? So that is just by design. But then again, having spoken to many of the traders that we work with, one of the things is that they don't want their positions and the things they have be publicly broadcasted, right? So, and a great example is James Wynn. Like, yes, it was fun to watch the drama unfold, but also because his positions were public, he I suppose paid a hefty price in terms of the lawsuit.
People actively hunted his positions.
Yes.
Can we prove that on chain? I mean, I guess you maybe can't like objectively prove it, but what makes you say that?
I mean, that position was public on Twitter to everybody, right? So and that kind of and result people.
Yeah, and the incentive is just there to like liquidate him, obviously. Okay.
Right. So and then obviously, I mean, I'm not sure if anyone price manipulated particularly to screw James Wynn necessarily, but at least he was saying that's what happened. So and then CZ goes on to say, like, we need dark pool and things like that. So that was a big drama that unfolded like a couple of weeks ago. But generally speaking, I think James, Jeff was talking about how in TradFi ETFs and whatnot, they again have to follow so rule of they have to be transparent about their positions. But then I think the whole point there was like maybe it was because the regulators forced them to be compliant, and as a result they have to disclose what they do. But otherwise, if you talk to most hedge funds, they would prefer to keep their positions private, right? So, or even their actual balance and anything else they're doing, like they don't want that to be public before anything happens, right? So in that case,
only for whales? Does that only matter for whales like James Wynn, or does that matter for retail folks, you think?
I mean, I would generally not want anyone to track my wallet and see exactly how my funds are moving, right? Just for, not because I'm doing anything bad or good, but just generally speaking, I don't want people looking at how I spend my money, right? So now whether it be on an exchange or just generally speaking, anywhere, right? So but on whale trading, that's also why you have OTC desks, right? So if you have really massive orders, you don't even see them on public CLOB. They would go through OTC, because seeing that already is not a good thing for them, right? Because they can actually be attacked just from seeing if you have a large order pending in a CLOB, that is not good either, right? So that's also why they go through OTC or even dark pools, which is the
or an RFQ type system, right?
RFQ is a good example where we can actually do an RFQ. In fact, most OTC desks use RFQ to basically. So RFQ is nothing but it's a request for quote. So you're requesting a market maker or a shop to basically give you a quote for a price without disclosing your position to the entire market, right? So you just do that so that's to not affect the price in the open market or cause any kind of disruption, right? So and so specifically applies to whale traders, but also to most general retail doing like decent sizes. Or like anybody, right? You don't want your balances to be public.
Yeah, totally.
That's sort of where I think our position has been, that you have to solve for a couple of things, right? You solve for speed, which you can solve through either building an L1 that is really performant, or we prefer the roll-up design, where you simply use L1 for verification, but then you run everything else off-chain, right? Like the general principle here is that move every transaction or any kind of compute logic off-chain and only verify the essentials on-chain. And now the ZK tech is there. Just use zero-knowledge proofs to verify the critical components or the state on-chain, but then otherwise just run your company logic off-chain, right? And it's basically a rollout, right? So, and that part could be centralized, and it's completely be okay as long as you can verify the centralized actor. And in a doomsday scenario, if you have the ability to exit from the rollup without the permission of anyone, I think then that's actually a pretty good design, is how we see it. So at this point, like by moving everything off chain, you already achieve a good degree of privacy. Like you're in the same league as other Binance, OKXs of the world. Then the question becomes, how do you exit, right? So sure, you can prove ZK proof on chain, but that proof could be anything, right? So how do you actually know that what's in the proof is the data that was in fact related to the trades, transactions that have taken place, right? So this is sort of what we built with Celestia. We call it the private DA. We have an interesting name for it. I think that'll be revealed next week. Yeah. But the idea,
too much.
The idea is you basically post encrypted data on chain, but then you also compute a ZK proof that proves that the encrypted data does in fact point to the right set of data, and then you have a bunch of validators who hold the decryption key for that. In a world where we turn evil and decide to just censor every transaction that people can just exit. So that's the general mechanism of how this has been designed. But I think the core philosophy here is that privacy and speed, and hopefully and fees are the three important things that users care about. And speed you can achieve by basically separating L1 verification from just the computing, right? Because now that we're doing off-chain computing, we've in theory achieved like microsecond latency, right? In doing so, and then really, even at like trading level, if you do like 3 to 4 millisecond latency, and if you co-locate in Tokyo with everybody, then you're getting it close to that, which is nice. So really, I think at this point, it's a matter of how do you offer privacy, but then also have the ability for users to exit from the exchange if things go bad, right? So and if you achieve those boxes, then I think it's actually good enough design space for anybody to trade without having
so,
the trade.
So you kind of open up this question, so I want to kind of like continue on with this conversation. We're nearing the hour mark, so I don't want to go too much longer. But specifically, you talked about like DA and specifically like this private DA solution that will be announced next week. But that kind of like leads into this broader question, which connects to the title of this whole live stream, which is CLOBs on Blobs, which is it's my opinion that I think the future of CLOBs is going to be built on rollups. They use a high performance DA layer like Celestia. And so I'm curious, like which, as rollup builders, or even as a rollup researcher, and this is like to Tristan and Sam, as well as Varun, like what aspects, like where does DA come into this picture? And like, why do we need high performance DA? And also what features of a DA layer do you guys as builders care about and pay attention to when evaluating where to deploy your rollup? Obviously, Tristan, you're building on Solana that has a set of trade-offs. Sam and Varun are building on Celestia that has a set of trade-offs. There are other DA options out there. So yeah, I kind of want to open that up. I don't know, Sam or Tristan, you guys want to take the first stab?
Yeah. So
you wrote a good tweet about this, by the way. But
myself,
you wrote a really good tweet about
Yeah.
great choices. Yeah.
I can actually go ahead, Tristan or Sam.
Go ahead. Sorry, Varun. Go ahead.
I thought Sam was gonna go. Wait. Let's let Sam speak. Sam, go ahead.
Okay. Yeah. So and just to clarify, so we're using Celestia DA settling on Ethereum. And the reason we're doing that is there's just simply not enough throughput on Ethereum to do that. So the first thing is it's binary, yes or no. Is there enough capacity to service what we want to service when we're looking at the competitors like Hyperliquid and Binance? And Celestia can offer that. And it's only really recently that we've seen that like kind of exponential growth curve in the capacity of Celestia and the projections. You guys are hitting your targets, which I'm super stoked about. And it really looks like if these are successful with CLOBs, we're going to chew up all the CLOBs on blobs that are available. That's snuck it in there. But I think outside of the just raw throughput, I think like there's integration components that play a role, like how easy it is to integrate, how mature the infrastructure is for those integrations, and the support the team provides in doing that integration. Like we tested out quite a few different DAs before getting there. And then finally on the feature point, I think the integrations with the chain that we're on. So with Ethereum using, for instance, Celestia blob streams, it's essentially the best alternate through the eyes of crypto, the best alternate security. Like there are trade-offs to splitting your settlement and DA, and Blobstream just finds a really healthy medium. And that's one of the big reasons why we're stoked to be using Celestia.
Makes sense. So throughput is obviously really important because as you're saying, 1K TPS per user. So you need a ton of DA, and then it comes down to the like how reliable is it? Is that kind of or just how easy it is to build on top of? Plus then the security part. Is that
And on the reliability thing, I'll just mention quickly that I think the quality of service of infrastructure is overlooked in crypto. Like that Chain Derby thing, the fact that we had 3 of the biggest or most promising L1s saying that they only just realized they've got poor deployments in APAC region for their node and load balancing is just highlights how little attention this gets. And so, I think the quality of the DA is super important. It kind of follows up. The DA is not quality. Your stack your like execution can't be quality. You can't have it support the 99.9% uptime.
So, by the way, just expanding on the reliability thing, this is something I've been curious to ask you guys, and maybe Tristan, you can respond to this. Reliability of the DA layer, how important is that in the sense of if there is a liveness failure or there's some kind of congestion or something like that, how bad would that be for a club? Would it be like absolutely devastating? Like, so is that something you guys think about when you're building and choosing a DA layer? Is it like, well, let's make sure it's one that has high, if not immaculate, like uptime, because we just cannot afford to have like any downtime whatsoever.
Yeah, that's a really good point. I mean, liveness is super important. When we used to build on the L1, like this was a big thorn in our side sometimes. Like back in the day, not anymore, but like Solana went down, like every couple of months, and it got a lot of FUD, and it was really annoying. And it was very hard running an exchange because when the exchange goes down, you have a bunch of just open interest that's on the platform. And then when you bring the platform back up, we had to just kind of force settle everyone or like close people out of positions, which I don't really want to do, but it's like a risk factor. Like if the prices move 20% in the day that it's been down, like you can't really it's hard to bring the order book back up with all the orders there. You have to kind of like close all those out. Thankfully, it hasn't gone down the last 2 years, thanks to the good work of the Solana engineers. But it definitely matters a lot. In the rollup, there's like it's slightly nicer for us in that I would say we can run in kind of like a headless mode, probably for like a couple of hours or maybe up to a day, I think, depending on like how much data gets put into the sequencer. Basically, the sequencer has to hold it into memory, and then it needs to basically write it down to the DA layer. So we can run for a period of time, but eventually it's just going to have too much kind of bloat in there. And then that's when you start essentially having to invalidate a bunch of these pre-confirmations that you've given out to traders. And this is definitely pretty catastrophic, I guess, for traders. Like they've gone and traded a bunch of stuff. They're like, hey, all my trades are fine. They're kind of filled. You kind of told me these are all good to go. And then you come back to them and you say, actually, all this, we're going to roll back the last, whatever it is, even like an hour of trading data. I've seen some centralized exchanges do it, and they lose a lot of customers, and a lot of like good faith is lost with their kind of trading counterparties. So I mean, it's nice that we don't need like 0 slot inclusion into Solana blocks, like, you know, to get DA in there. But I think having a bit of like leeway there is good. But yeah, if there's like a serious liveness failure, that's a big deal. And I think it's nice. It seems like Celestia has that kind of 20 megabytes of throughput, like quite a lot of throughput is like generally pretty reliable. So it's nice that you guys are really prioritizing a lot of these things.
Yeah, I can imagine also, like, let's say Celestia or the DA layer in question goes down for a period of time. It's not just that then you guys get backed up, but everything else is getting backed up. And when it comes back online, there's a rush to everyone post all their data. You know what I mean? And then it could
this literally happened on Solana. Like I remember with like Orca or something or other, you would look at, someone wrote a really good tweet back in the day, but like Orca would resume its pools, and because like the fair price, you know, externally in the world was like quite significantly deviated, might be like, and this usually happens during big market moves, right? Like something really big happens in the market, a lot of congestion, they hit like some kind of bug in the validator code, the whole network goes down, and then you kind of bring back up this AMM pool essentially, and it's like way off, like the price that it's currently at on the curve is like way off what the market thinks it is, and someone comes in there and they just like wallop a bunch of these kind of taker orders, and just like whoever was in that LP pool is just gonna like lose 30% of their money, which is kind of rough.
Well, but before we like move on from Tristan, I also want to like talk specifically about Solana, because Solana is not, you know, designed as a DA layer. You guys are using them as a DA layer. You're built on Sovereign SDK, by the way. Shout out to Sov SDK team, who've built a roll-up stack that is like the most flexible in terms of like you can settle anywhere, you can use anything as a DA layer. Really, like kind of a marvel of roll-up design. Why choose Solana as DA? And then what are the constraints that come out of that, given that Solana is not designed to be used as a DA layer? Like I think they don't even, you know, Ethereum had call data, which was like an easy workaround. I don't think even Solana has anything like that. You basically, and like the max transaction size is very small. So even if you're just posting, you know, raw data, it's you have to post a ton of different transactions and then I guess index across them. Like it sounds hard, and I also wonder about the cost. So I've been dying. I've seen you tweet about this, but I kind of wanted to ask you live.
Yeah, I mean, we build on Solana because we've been building there for 4 years. That's where we have kind of the user base, and that's where we have all the kind of experience. When we started building with Sovereign SDK, the nice thing was they basically are agnostic to everything. You can kind of think of it as like, I don't know what a good example, but everything is like plug and play the DA, plug and play like ZKVM, you know, whatever kind of components you can switch out. And I think that's really nice because infrastructure changes so much in crypto. And if you commit to like, I'm using this kind of particular ZKVM, or I'm using this particular layer or this execution environment, and suddenly something really good comes out, it's really nice for the application to be able to just kind of get that in there and start using it. So we kind of really pushed them to do the Solana thing. They were pretty against it, but we were like, this is important to us. We wanted to do it because we wanted like a really fast kind of native bridge to Solana, essentially. We also had just like a lot of users there and a lot of like capital already on our existing platform that we could essentially bring over. And I also had the bet that Solana has basically the best networking stack in all of crypto. Like the Fidancer stuff they're doing is incredibly cracked. And like, I think if they can kind of scale the network and that kind of P2P layer, like it would actually do really well for DA. I guess like the reality is we spent a couple of months like building out a DA adapter for Solana. It works. We can get a few hundred TPS, which is good enough, but it's like not crazy. There have definitely been some friction points, I would say, in terms of things on the RPC layer make it really hard for us. They also deprecated a bunch of functionality, which is really important to like Merkleization. You can look through the SIMDs, but this is like this accounts delta hash that they got rid of recently because it's like kind of like a performance thing, but it kind of means it's very hard to build light clients now. There are some guys doing it, but you know, you have to kind of do workarounds and you have to really, it's not like natively supported. We are posting everything in kind of call data of Solana transactions. So that's kind of the same as Ethereum, but we don't have this, is it EIP 4844? I might be getting that wrong, but they have the kind of special blob binary kind of data types that's not available in Solana. It's like completely generic essentially. So yeah, like we got it to work. You have to do a lot of hacks and workarounds, and like it's not natively supported. And I don't think it's like a massive priority on their roadmap. We've been trying to work around those constraints, and yeah, we'll kind of see how it will go. It's like a very ongoing, active area of discussion right now.
Interesting. Yeah. It's you know, I feel like Solana, on the one hand, has always been kind of anti rollup and anti L2, but then they were like pro their network extensions, which to me were essentially like a rebrand of a rollup. But then other than adding some of the ZK like sort of proving functionality, they haven't really supported like the DA aspect of these network extensions. So I don't know. It'd be interesting to see if they pivot or how based on the I actually kind of want to turn it over to you, Sunny, because that was like the theme of your tweet yesterday was about how like you said TLDR. I think Solana should work more actively with potential network extensions to bridge the CLOB performance gap until mainnet is optimized more fully for this use case, which could take years. The risk is losing the use case entirely. I don't know. Like, do you want to expand on that? That was like a lightning rod of a conversation, to be honest.
It was. And the reason why, like, I think this is such an important discussion to have is because essentially we boil this down to what the use case really is it's trading. It's trading both spot and derivatives on an order book. And to me, that's not just a use case. That's like the use case, arguably the use case of crypto. Like outside of Bitcoin store of value, outside of stable coins, this is the use case. And so it's not just important to like have it, it's important to be like a dominant player within this overall trading landscape.
And that's what internet capital markets is about, right? In theory.
Sure, yeah. Trade everything, trade anything, tokenize it, trade it well, have it be incredibly capital efficient, have price discovery for any asset and every asset on chain. Like essentially these all tie back to trading in some form. And like I spent a lot of time looking at app revenues, and by far like the business model that generates the most revenue on chain today in today's crypto economy is trading. And so it is to me like one of the use cases that you want to have, especially if you want to call yourself like a decentralized NASDAQ, where the NASDAQ is literally an order book. But yeah, the tweet itself kind of lies on this underlying assumption that Solana will not be able to host a highly competitive performant CLOB. And we've talked to, these great teams have been talking today about like latency in the millisecond range, 1K throughput per user. Like the reality is today, like you cannot do that on the Solana layer 1. And the assumption is if this is going to take time to build, or if this is even possible, or it could be potentially just impossible, which the Solana team seems to disagree with. But if it at least is going to take like a lot of time to build, then why give up this use case now to an entirely external player? Why not have it on as a network extension and try to win it in some shape and form? At least maybe one step removed from the Solana core ecosystem. But if you think you can get this out by the end of the year or within a couple of months and have a CLOB on Solana be just as performant as the crack devs that we're speaking to today are building, then yeah, like go and do that. But my tweet essentially was, look, if this is going to take time to build, you can at least try to win the use case now and give Tristan the resources that he needs to win. And maybe even one day, if you do get the L1 performant enough, you can convince them to migrate back on chain or create another application on the chain in some way, shape, or form under the same brand. And so that basically was the juxt of my tweet, because today what we're seeing is if you want to build a competitive CLOB on chain, you've got to do it with either an L1 design that uses co-located validators, which is what Hyperliquid is doing, which is what Fogo is doing with multi-local consensus, and introduce some form of a opinionated speed bump like cancel prioritization, or you can do it on a real-time layer 2, real-time roll-up, real-time blockchain. It could be dedicated block space, basically what Bullet is trying to do with the order book in mind. It could be a general purpose real-time layer 2 like Mega ETH is, which is using IGA DA, and that's going to bring like a whole lot of TPS needs in terms of like the DA market overall. But yeah, my view is if you can't win this use case right now and for the foreseeable future on the layer 1, why not try to win it on a network extension or a roll up? But if you fundamentally disagree with me on the fact that it's going to take time to build and that you can get it out soon, then yeah, by all means, that sounds great. But yeah, that was my stance, sort of.
I like that. It's kind of hard to refute that argument. It'll be interesting to see how this all plays out over the next like few months, if not like over the year. So we're at an hour and 10 minutes. I'm going to start kind of like leading us towards the wrap up here. This has been a super interesting conversation. So I want to zoom out a little bit and talk about how, like, I tweeted something a couple of weeks ago about what is the advantage specifically of using Hyperliquid versus using a centralized exchange like Binance, right? And like a lot of people responded. And the reason I asked that is just basically, I was curious, like, what aspects of being on chain actually matter to end users, right? And are attracting people. Because obviously, if you think about it, why, if AMMs and some of these other models of decentralized exchanges sucked as far as like price execution, they suck for liquidity providers, all this stuff, why did they exist in the first place? And obviously there's a lot of these dimensions of decentralization that I think led to that. One is just permissionlessness, like you can just create your own market on Uniswap or wherever. So you didn't have to like go through an exchange listing process. I think there was cool things around the fact that your LP position was, a fungible asset that you could then use to compose with DeFi or borrow against and things like that. But there's also this element, and the main response to my question about Hyperliquid was actually because there's no KYC. That's what like a lot of people were saying. And so, there's two potential reasons why that matters so much to users. One is, privacy, I guess, like they don't want to have to disclose, like they don't want what happened to Raj with Coinbase and leaking his KYC information, or let alone maybe they just don't even want the exchange to have that information to begin with. And I guess some people were also saying, like, I guess they don't want to get taxed. So like they want to stay anonymous so that, their funds don't have to be linked with their real world identity and potentially be taxed, I guess. But I found that either way, I found that interesting that like the no KYC part was like resounding. Like there were other responses, but that was like the resounding most popular thing. So with that in mind, I'm just curious, like, what do you think are the advantages? Like, say we can replicate all of replicate the exact same trading experience of a Binance, same latency and same like cost to send orders and things like that. Same level of, I guess, privacy as far as that matters. What is the advantage of on-chain versus off-chain? Like, why will more and more liquidity, why will more and more users sort of migrate to this off-chain version of finance? And I think this is an important question because I think everyone's goal here is to basically have decentralized finance eat centralized finance over the long term. So yeah, I'm curious what you guys think about, like why that would be. What is the bull thesis, or what's the reason that decentralized finance matters and should win?
I saw you unmute unmute your mic, Tristan, so I'll be quick. I think additionally to KYC leakage, I think self-custody is big. We don't want to have another FTX.
Yes.
And just having like all the data open and accessible. But I think an interesting one is actually that if you look at the history of CeFi or order books, each of the biggest of their era came to market through regulatory arbitrage. Like BitMEX came to market by just opening perps to everyone. Binance came to market by letting everyone access it. FTX did the same thing, blew up, and Binance was able to reclaim that market share. But they all go through this process of opening up regulation. They get so big, they get in the scope of the regulators at B, and then they rein in their features. So in Australia, you can't get perps on Binance, for instance. That's a massive advantage. So I think go to market for CLOBs on chain is massive, and Hyperliquid's really proven that. So
kind of like regulatory arbitrage then. It's like,
for lack of a better term, like openness and accessibility. I don't want to say reg arb, but it's like, yeah, people are adults. Let them do what they want to do.
Yeah.
I'll take it in a slightly different direction. Like my backstory is, I guess, Solana was quite affiliated, I guess, for better or for worse, with like FTX back in the day. That was basically everyone's exchange. Like you would trade on-chain put stuff into Radium, lend on Sol Lend or something or other, and then you would use FTX kind of as your piggy bank and basically like the perps trading platform that existed. And then obviously, like I went to the Bahamas conference there, and kind of saw everything that was going. And
you were there?
FTX collapsed. Yeah,
you were at the conference. How long was that before the collapse happened? That was like weeks, right?
6 months. Oh yeah, maybe it was shorter than that. Yeah. Okay. I don't remember. And then FTX collapsed like the day after the Solana breakpoint in 22, I guess, which is kind of wild because we had like a really electric conference, and then you get off and it was just like chilling in Portugal the next day, and then like everything just went to shit. But then it made me very much realize having like a bunch of money on there, having a lot of friends who had money on there, a lot of Solana teams literally had their treasury on there. It was kind of crazy that they got away with what they got away with, and it damaged a lot of people. And so at that point, we were starting to actually build our perps product. We were previously like an options exchange, and we had just launched our perps product like a week before that. And to me, I was like, oh my God, like this is the opportunity. Like FTX has gone down. We can build something that is like fundamentally much better than this. We want to see everything that's like transparent on chain. We need to be seeing if money is going to Alameda's wallet from like customer funds. Like this needs to be traceable. This needs to be, open. Anyone should be able to like dig into the data there. I think that's why Block Explorers are fantastic, that you can audit everything. I think on top of that, Sam talked about self-custody, just so important, right? Like it was so scary to be in there with one of these exchanges when they're like, we're blocking deposits, you can't get your money out. That's just like the worst experience, and just like, just like battle scars from that. So I think self-custody is very important to let people own their own funds. And then I think 3, just like it's a trust thing. It takes years to build up trust. I think, Sam built up a lot of trust with the community and then kind of torched it. And then I think a lot of the exchanges that kind of filled the place, I have not had the same level of trust with like a Binance or Bybit. I think like I just don't know them intimately enough. And I think given some of like the recent like launches on Binance, how much they charge to projects, like the price performance and all this kind of stuff, it's kind of like what's going on behind the scenes. There's not a lot of transparency. And so, yeah, like seeing Hyperliquid was definitely a breath of fresh air for me, because they seem like they're doing stuff that's very community oriented. They're trying to actually, not screw over their customers. Like Jeff actually has a really good tweet where he just kind of calls out the CEO of BitGet for basically trading against their own customers. And that's why his previous HFT like stopped trading on BitGet, because he noticed there was all this like front running of orders that was happening. And you don't really get that in an on-chain setup. Like you can kind of verify everything. The nice thing in these kind of ZK order books is you can verify every single computation, every single trade that goes through there. People can come in and cryptographically like go and prove a lot of this stuff. It's not a black box essentially. So I think, like trust, transparency, self-custody really matter. And then probably the last one is just opportunity, right? Like I said, a lot of these centralized exchange launches, very extractive. I feel like people are just losing money. I definitely don't kind of partake in that kind of stuff anymore. And yeah, if I was to say like, where have I made money or where have I seen opportunity, it's being on chain. It's where the new assets are launching. It's like, trading all these different opportunities. DEXs are able to list these new markets very quickly. And I think that's what's, the promise of internet capital markets and why people want to be on chain. And that's where the opportunity is. And so I think, more and more mindshare will just move to DEXs. You already had a Hyperliquid airdrop of what, tens of billions of dollars, which is just insanity to think about. And I hope like more projects get to successfully like IPO in that way and have this wealth effect for users.
Wow. So I just want to comment on the non-custodial part, because I think that's kind of also what Bitcoin's about. It's like, not your keys, not your crypto kind of thing. And yet, I don't know. I just like, no one answered that on my tweet. No one was like, oh, well, because I know I can't get rugged. But maybe it's because those people haven't been rugged before. Maybe the amount of funds is like low enough that they don't care as a percentage of their net worth or something like that. But I mean, I that's what I want to believe, right? Because I believe in verifiability and blockchains as ledgers that like enforce the rules that you agree to. And a sequencer or validators can't unilaterally just seize your funds. Like, well, and rug you basically, like what happened on FTX. But and interestingly, we didn't talk about this, but I feel like that might be one of the dimensions in which someone can improve over Hyperliquid, because as far as I understand, Hyperliquid's custody is like a multi-sig on Arbitrum, if I'm not mistaken. So like maybe that's something you guys can improve upon if you think that's a valuable thing. Like make a more secure way of custodying people's funds on the CLOBs you're building. Anyway, I don't know, Sonny, I saw you unmute, so feel free to chime in.
Yeah, I think that's the goal for Hyperliquid. By the way, I think that's more of a function of not having native USDC. That has caused reliance on this arbiter multi-sig bridge, and so I think we'll be addressing the issue. But just to add two things that I don't think have been talked about, Tristan and Sam both brought up amazing points. I think self-custody and transparency is a very big reason why we should be using on-chain exchanges in the long run. But from a regulatory arbitrage and non-KYC angle, there were a lot of comments talking about how this benefits the user. There are not a lot of people talking about how it benefits the exchange. And in my view, if you have access to borderless takers around the world who can trade on your platform and are not segmented by region, you will have the winning exchange as long as you meet performance parity with these centralized venues. And what I mean by that is if you can aggregate more users around the world than Binance can because it's geo-restricted and geo-blocked in certain regions, if you can aggregate more users around the world than the NASDAQ can, than any of these centralized exchanges can, who are beholden to like geographical-based restrictions from a customer angle, from a customer's perspective, you will have a more liquid exchange as a result. And so it doesn't just benefit like an individual user. I think if we take a really long time frame view of where these exchanges might head, it actually creates like a better end result. And the last thing I'll say is, again, a lot has been said from the user perspective and from the trader perspective, but composability unlocks like a ton of things from a building perspective. And so just to give some examples, like BNB is a massive chain. It's the Binance Smart Chain is a massive chain. It has zero composability with the Binance order book. Hyper EVM has aggregated about like over $1 billion now in TVL, and write precompiles aren't even out, write precompiles aren't even out, which will allow you to execute a direction autonomously or a transaction autonomously directly on the Hypercore order book itself. So there's clearly demand for this. A lot of people don't notice. A lot of smaller like third world regional exchanges are actually just front ends for Binance. Like they're just basically using Binance as a back end. And Binance can raise their profit sharing terms and change them immediately with these guys whenever they want. And so they're kind of beholden to the centralized player who is looking at these guys making a certain amount of money and going, hey, actually, like maybe we want to charge a little bit more. Hyperliquid has been very open about the fact that they will allow permissionless third-party builders to come in and build on top of Hyperliquid's order book, whether it's through like a builder code or whether it's through permissionlessly listing perps and spot assets directly from third parties. They will actually allow you to make way more money than they can on their own flow, which is not something that you would see in any way, shape, or form from a centralized venue that's only really about bringing back profit for a certain organization. And so that kind of reliability,
it's like incentive alignment almost, but keep going.
Yes. Yeah. I think in some ways that's almost a factor of decentralization, like upon itself. And so I think that unlocks a lot more. I think what Hyperliquid could become is just like an aggregator of everything. It could become an aggregator of takers around the world. It can become an aggregator for permissionless third-party builders around the world and create like the best possible end result and potentially a new like exchange primitive that we haven't seen ever before. And it could be any of these exchanges. It could be any of these like on-chain CLOBs. They all have the potential to do this. And so, yeah, just wanted to add that to the conversation. Sorry for
no, man. That was super fascinating, and I never thought of the things that way before. And I mean, I'm sad we didn't get to talk about this whole idea of like, do we start out as like these app specific CLOB chains and then generalize more to benefit from this composability or not? But then I guess we can leave that for another conversation. But it's a very interesting idea. Varun, do you have any comments on this before we wrap things up?
Oh no, I think generally everyone has summarized it pretty well. But I would say the world that would be ideal, very much in towards, is where people shouldn't even tell what's a DEX, what is a centralized exchange. Like that thing should just not even be a user's mind when they're choosing a product. Like they just should use a product because it serves the purpose. It does what's supposed to do. Right now, that being said, obviously, I think this is a joke where everyone has to go through a cycle where they go to pump and then they get scammed and then they learn the lesson for the next lesson, next cycle. So generally, what we want to break that cycle. And if you don't want to go through a cycle again, wherever you have to learn your lesson by getting scammed, the lifting of building the infra that doesn't lead to the said scams. So as a result, you can argue a user doesn't care about custody or privacy or any of these things, but then when things go wrong, then everybody cares, right? So basically, as a developer, your job is to basically build the infra to make sure that doesn't happen, right? So, and then obviously let the best tech adopt and build things, may the best product win, right? So that's what it comes down to.
Yeah. I mean, it's a tale as old as time for crypto. I guess, all the way back from Mt. Gox to there's so many examples throughout the history, even before FTX. And yet I feel like the scars get forgotten by the next sort of like generation of traders and degens. So now I guess let's close things off. I want to hear just quickly from all of you guys, like, what is your guys' roadmap for what you're building? Where can people learn more? When can users and traders like test out the product, and where can they follow for more information? And then for Monk, I guess, Sunny, like you could just talk about like when report V2.
Soon, by the end of the month, and then I'll pass it on to these guys.
Nice.
I'll speak, yeah. So yeah, Hibachi, I think Twitter handle Hibachi_XYZ, and the website it's hibachi.xyz. So I think that's where you can go find us. In terms of the roadmap, I think we are pretty close to coming out of the beta form, right? So no pun intended. So basically, at the moment, we've been past few months we've been working mostly on the infra side. Like the private DA should be out next week, and then there's some more core infra work that needs to be addressed to achieve the scale that we would like to. So we're hoping to wrap that up by mid-July, and then basically go full production mode. At that point, I think the goal here would be to be a complete exchange in the next 10 to 12 months. This includes things like native lending markets, going multi-collateral, adding vaults, maybe even introducing spot and so on. So I think there's a lot to be added as we scale. So I think the goal was to first build fairly complex infra, make it work, achieve the sort of performance that you would like to see from an exchange, and then from there on expand to scale these things, right? So I think that would be what we'll be looking into over the coming months.
Love it. Sam, you've been teasing us with these testnet numbers and latencies and things like that. So when can we actually touch and feel this rise real-time roll-up?
Hopefully soon. So we've got the testnet's been live for a couple of months now. We've done about 2 billion transactions, just working hard on getting the infrastructure as solid as possible. We do have 2 CLOBs, the fully on-chain CLOBs live. One is Nitro, the other is Standard. So I'd recommend go checking them out. If you can go to check out our portal.risechain.com, you'll be able to see the apps there, and our Twitter as well as rise_chain. Timeline-wise, targeting Q4, possibly earlier if things go brilliantly, but early Q4.
Sooner. I didn't realize you guys had 2 CLOBs. I was only aware of a Nitro. So
what's the other one called? It's gonna be the CLOB chain.
Oh wow, okay. What is the other one called again?
Standard.
Standard. Okay, nice. Yeah. And you guys are building on the Mamo 1 testnet, right? How has that been?
That's right. Yeah. So we're not live on the testnet just yet. We've just been finalizing some integrations.
Playing around with it.
It's been going really well. We're just making sure we're very cautious about quality of service. So we're just letting it run for a few weeks before we go live.
Sounds good. Tristan, close this out.
Yeah, you can find us at bulletxyz_ on Twitter. My Twitter handle is the same as what it is here. in terms of timelines, it's pretty exciting. We're on testnet right now, so you can go like kind of paper trade on there, test out the network.
Oh.
We're seeing 3.5 millisecond kind of order execution in production essentially, with a couple of hundred TPS going through. We just finished our mainnet audit essentially. That literally came back like a week or two ago. We've fixed up everything and it's all kind of patched and ready. Just like a bunch more load testing, stability testing, just getting it ready for production. The devs are kind of hammering it as much as we can. And so I think we'll be hopefully out in mainnet. I don't want to give a firm date, but like next quarter, I think is absolutely going to happen.
Wow. Okay. Next quarter. So, Q3 before the end of, I guess, September. Nice.
Yeah. Probably earlier. I think definitely earlier. Yeah.
Cool. Yeah. Everyone should go and try, test out all these CLOBs. And thanks everyone for tuning in. This has been a great conversation. I learned a lot. Thanks to all the guests. And I think, there's a lot more to discuss, and we're going to see this whole space evolve extremely quickly, I think, over the coming like 6 months and year. And I think it's clear to everyone that the whole industry is kind of converging on this idea of CLOBs. And best of luck to all you guys. And I hope that, Celestia's DA layer can support you guys in this next phase of growth as you guys come to market. So thanks again. Tristan, Sam, Varun, Sunny. This has been a great conversation.
Yeah. Thanks for having us on. Really appreciate it. And looking forward to when you take the bet with Carl Samani.
Right. What did he? I don't even remember what he betted me on. Anyway. All right, guys. Thanks so much.
Thanks a lot,
Cheers.
guys. Yep. See you later.
See you guys. Bye.